Hey, ladies and gentlemen, welcome to the weekend edition of Wealth Dom. Your host, Norbert B. And we're going to go over a portfolio today. What we bought, what we sold last week, why we did it. We're just going to talk about the markets, what happened to the markets, going to go over a couple of earnings, and we're going to do our risk assessment for the next week. Remember, this is the presidential election week, a lot of stuff happening, and also a Fed week, Fed decision week. Okay, so let's go over the market. Let's first of all see what the S&P did. S&P 500 closed just a bit in a positive, had a last positive day after a huge sell-off, but I think this was just a reflexive rally. Then the Nasdaq also closed in the positive on Friday. Remember, we only do these kind of videos on the weekends because we want our market to be closed, so I can report on my positions, what they did, how they performed, also how our portfolio performed, and that's going to quasi explain why we made our trades. Also, we want to see our trades, subscribe to Substack. We're going to get our live trades, so each time we do our trades, we're going to be informed. Also, if you want to watch weekly daily updates, subscribe to the channel because we do that on a daily basis, and we're doing it from Monday to Friday. So now let's go into the portfolio. What happened last week? How did the portfolio now close up? We are at only 26 positions with our portfolio. Oh yeah, one thing I forgot to mention last week, I took out Bitcoin out of the portfolio. I didn't sell my Bitcoin. Don't panic. I just took it out of the report because I actually don't make any kind of moves with Bitcoin. Rarely I make moves. Talking about Bitcoin, if it will have it, so I'm just going to tell you what I'm going to do. If Bitcoin is going to have a dip, Bitcoin, how's it doing right now? Bitcoin futures, it's going down. So if this is going to have a dip, significant dip on, let's say, Monday, Tuesday, maybe consider buying a tinge, whatever you can afford to lose. If going to have another dip after the presidential elections, also buy that. So I'm going to also buy, don't you do what you do. I'm also going to buy that one, just a tinge, because I suppose the two outcomes for Bitcoin for the end of the year, and that is rally. A Colin McRae rally is almost baked in the cake for Bitcoin. Of course, this could also not happen, but I do count on a Santa Claus rally. Okay, now let's get into the portfolio. Our portfolio was, let me just check again. What you're seeing here is a web application that I created, so you're not seeing my actual, I have three portfolios combined. These are the three portfolios. Okay, so you're not seeing any values or something like that. You're only seeing what position and what weight that position has in the portfolio, or some of the positions. For example, Treasury bonds I have in each of the portfolios. See, I was on the last week, I was down 1.49 plus, I was down just a second, 65, so 1.49. I was roughly 1.5% down last week, but most of the portfolios behaved that way because what did perform last week? Nothing. Neither did bonds, neither did stocks. Nothing performed last week, and I was quasi wrong, but I think I'm going to be right next week regarding the bond position. So what I did do, one of the buys, I'm managing three portfolios. I bought more long-term treasuries. It's equivalent. So why I'm buying here, this right here, this little fellow, it's equivalent to the TLT, long-term bonds position. Now this is yielding 4.44, and TLT here is yielding, it's yielding 3.68. So this is a much better ETF. Also, this has a TER of 0.08, and we have here expansion ratio. Let me just check the TLT. This one has 0.15. So I would really much recommend this ETF over the TLT just because it's much more cheaper and it yields higher yields. The difference is the TLT returns monthly money, so you're getting those dividends monthly. It's basically 3.68 divided by 12. Okay, so that's what you're getting each and every month, and it is influenced then each and every month. But I do have something equivalent. Okay, so the TLT gives you each and every month that yield, and this one right here where I'm using iShares US Treasury is an ETF. TLT is also an ETF, but this gives 2 times a year. Okay, so December will be the next dividend date for this bond treasury. Okay, now the other one that would give you, I didn't add to this position, the other one would be this one, Vanguard US Treasury Bond Distributed. This will pretty much be like the TLT. This yields a monthly, it is also higher, 3.99. So both of them I chose because from where I'm standing, I'm situated in Germany, from where I'm standing, it's much better for me. I also cannot buy the TLT from here, from the brokers that I'm using. So for where I'm standing, this is much better for me, but I believe that for US citizens living in the US or having access to US brokers, the TLT is much better. Okay, continuing on, we opened a new position that is AMD, and we're pretty much down on this position. I must say that after was the day before they reported earning, I was thinking about selling it here. I did not sell it, and then I added to the position somewhere down here at the 144. So we're down almost 10% on this position. As you can see, it is a 5.49% of the entire portfolio, so it's a pretty big position. But I would say that although Advanced Micro Devices is not NVIDIA, this has a different prospect than NVIDIA. It's not a better stock than NVIDIA at the moment, but when a refresh cycle will happen in 2025, and AMD is benefit, I believe, more than NVIDIA. Okay? So this is basically why I would choose now at this moment. So if you have the possibility now to add to NVIDIA, you should take it into consideration. I'm not saying that you should add to it, but you should take it into consideration. Okay, let's move on. So ASML is just at its lowest it has been since, like here we have here 1 year. Yes, it's basically went nowhere in 1 year. So yeah, let's just leave it at that. Will ASML recover? Most likely yes. The question is when and how much lower can it go? The two very important questions. Our cash position yields currently 3.25% after the decision to cut. So European Central Bank cut 25 basis points, and we have a cash position of 4.71% of our portfolio. We had a little bit to Chipotle. Once again, Chipotle had okay report. It did guide down. The stock went down. And well, we added to it because we liked it. United Health and Novo Nordisk, Toyota Motors, Intel, and we bought Eli Lilly. We opened a new position in Eli Lilly after they had their earnings. The earnings call came in with all worse than expected, and they did guide down. But I believe this is just due to supply chain problems. So Eli Lilly, just like Novo Nordisk position is a bit higher, and actually I'm in the negative, but I do see Eli Lilly and Novo Nordisk having a pretty good 2025. Okay, let's see, and capital management, Truist Financial, Boeing Company, Visa, FedEx, CrowdStrike. We added a bit to CrowdStrike, increasing the position to 1 point, actually decreasing. It has a pretty good pullback, and we did add to the position. We dollar cost average into the S&P. Let's see, Ferrari, the sporting goods, GameStop, Rose, and GE Vernova. Well, you know our opinion about GE Vernova. So also, let's go to selling, because we did sell a couple of positions. I have to go into the portfolio. I really did not have the time this week to create all of the slides, so make a much better presentation, but you are going to have the blog post, and you can check that one out. You can visit on Substack and on my blog, and we're going to see all of the position, what we bought, what we sold, and we'll go through that right now. What was the reason for our decision? What was decision making? By the way, we did get dividends from CVS. We got our interest rate on our cash. We got dividends from JP Morgan this week. Okay, so let's see. We closed our position in JP Morgan. Why did we do that? We're basically expecting a pullback on JP Morgan, and we're going to add back to the position. JP Morgan was stagnating quickly. Morgan, there we go. So JP Morgan is pretty much stagnating here, and they did trigger a sell signal on the MACD. So we sold the position. It was just the rest of whatever we had up here, and we pretty much sold it, everything in the same range of $220-ish. So there's where we sold JP Morgan. We're looking to add back to JP Morgan. JP Morgan is one of those banks that is pretty much future safe with higher or lower yields. Don't forget, JP Morgan yields a dividend of, this is the ASML, quickly check here, of 2.07% yearly, and they already had their October 4th dividend ex-date, and they had already their payout. The next one will be January, every month. Okay, moving on. We received some dividends from Dell, and we close our position Alphabet. We're right after their earnings. They pretty much popped. So let's go Google, OOLNA. So this is the A shares, and we pretty much sold it up here. And we're expecting a bit of a pullback from Google, and then we're going to add back to the position. We're counting on adding back onto that position. I believe one of the two stocks that's going to outperform the next year will be Alphabet and Amazon. Didn't own any Amazon stock. We thought about buying it, but kind of missed on that opportunity, and we're going to wait. So we also did a trade. So we sold out of Alphabet. Then we made a trade in Altria. Just bought and sold it. We also made a trade in MicroStrategy. We lost a bit of money on that, just a tinge. We also received the cash dividend on Annaly Capital Management, and we closed our Dell position. Go to Dell, to the fact that Dell is just trying to trigger here a buy signal that also closed in the positive, but we closed, I believe we closed it somewhere here right at the start of the month. We missed that good rally. It did have a rally in the beginning of the week, and we just will not they didn't report earnings yet, so they are going to report earnings, I believe. Let me just check. They are going to report earnings not right after the election, actually later on in November. Yes, on the 26th of November they're going to have their earnings report, and until then I'm not going to do anything with Dell. So I'm pretty much, if I have to choose between Dell, Amazon and Google, I would choose either Google or Amazon. It really depends. Okay, so we opened up our position in Eli Lilly. Well, we talked about that. We sold Dell, we bought Amazon. Oh yeah, and we eliminated so we completely sold our position in Disney. Had a very good rally. I pretty much do not care about Disney. I would rather own Netflix, but I'm waiting for a better pullback. Disney is one of those companies that just badly managed. And until I don't see a better management in Disney, maybe they're going to announce, I believe next year they're going to announce the succession to Bob Iger, the CEO, and maybe then it's another possibility to add to Disney. Right now, I would say just leave Disney alone, exactly like Britney. Then we sold our position in Coca-Cola. We also made a trade on Stanley Black & Decker. We made a trade on McDonald's. Very good trades, both Cola and McDonald's. And that's pretty much it for, yeah, we bought actually AMD on Monday, the 28th. So that's pretty much it for the trades. Now let's do a little bit of risk assessment. So last week we did our risk assessment and we left it at 75% chance of something, of a pullback, something happening in the market. So risk in the market was 75% in my opinion. And we were right. The markets did sell off. I look on the complete markets here for 1 week. Here, 1 week. So we had the week from 28th till the 1st of November. And we did have a sell-off. Okay, now next week, let's see. So we have presidential. This is the 4th time or something that I'm adding this. And after that, it's over with the presidential elections. But if we, okay, so presidential elect, and we're going to add here the very high risk, 100%. We also had a Fed decision. Now, what the markets saw with the reports last week is pretty much baked into the cake that the Fed does not need to cut any more rates, at least at this rate, at least at this Fed meeting. So this is an interesting one. How should we evaluate this risk? Because the Fed does not want to surprise the markets. And the markets expect right now a 25 basis point cut. And as I said, the Fed does not want to surprise the markets. So I'm going to say that this is a medium risk. Okay, now this pulls back our risk to 75%. In the moment, the MACD is on a sell signal. So MACD, sell, but it's not that it was triggered, it's just selling off. So we're going to include this as a high risk, not a very high risk. How long can this continue? So can the bad news get even worse? Yes, it can. So we're going to leave it at high risk. Let's add this. The RSI is at 43, which we're going to say that this is right now a medium risk. It's not a low, it is not a very low. So low would be here and very low will be oversold. So the market is just, and also it's trying to get back here. So this is again a medium risk. The market is not an all-time high, so I'm not going to include this as a risk. But the biggest risk here is the uncertainty. So the uncertainty that whoever will come out president will also be uncontested. So let's say that clarity, presidential clarity. Because right now, the markets are pretty much pricing in a Trump win. So presidential clarity. I'm going to include this as a high risk once more. So with 70%, I just can't see any other kind of risk. So black swans and so far, so I'm not including it in my risk assessment. But what I am including is that the next week still has a 70% chance of the market doing something that will be not good for us. Let's just say that. Also, we are still at a pretty much high PE in the market. We're pretty much at all-time highs almost. Although we have a little bit of pullback here, this is still a interesting market for us. Also, if we try to hear a funnel, the markets are trying to go upwards. Okay, so this is still a bullish run. If we would be in a bearish run, this would be almost at 80, over 80, 90 even. Okay, so I'm going to leave you with this 70% risk that something bad is going to happen in the markets. Not bad, but we're going to see that we are going to see another pullback. And with this being said, please hit that like button, give us a like on this video. Also subscribe to the channel. It really helps us out a lot, and click that notification bell in order to get notified when we post new videos like this. If you have any questions or suggestions for future videos, leave them in the comments section below. And with this being said, I'm Norbert BM. This was our weekend report. Thanks so much for watching. Catch you next time. Bye bye.